So whatever the clients are there in the USA and UK who are working and having their offices in India, those directly comes through those members to us. That is the purpose of this. Now we are just 3-4 months old in the membership. We are developing relation with the about 100 members plus and trying to get the business from them, which will eventually be apparent to you probably in another 2-3 months time.
Basically, you are saying your marketing expense goes away indirectly with this membership. You are getting direct customer entry. Is that my reading?
Not only that, but you get connected to, because you are recognized by a body which only recognizes those which are compliant.
Okay. Thanks. All the best.
Thank you. So nice. Thank you.
Thank you. Ladies and gentlemen, in order that the management is able to address questions from all participants in the queue, please restrict your questions to one per person. You may rejoin the queue if you have follow-up questions. The next question is from the line of Anirvan Sarkar from Max Life Insurance. Please go ahead.
Hi, sir. Thank you for the opportunity and congrats on a good quarter. So my questions are an extension. Yes,
yeah.
Sir. So my questions are an extension of the questions that have been already asked. And I'll just take a minute to just try and see, there seems to be a gap in our understanding or that of the investor community in what you are trying to communicate and how we are seeing things in terms of forming a view about our future potential of revenues and profits. So the reason we have been asking about tonnage and capacity utilization is because if we refer the earlier phone calls, then we have been told that, with increased capacity coming in and, the utilization also coming in, we should expect realizations of 130-140 rupees per kilo. And let's say for 25,000 ton capacity and 50% utilization, we should expect something like maybe 125. And we do the math, it comes to around maybe 175, 180 crore of revenues in the future year with a 50% capacity utilization. Now, however, we are hearing that even with low capacity utilization, we are earning revenues from some other high margin businesses, and it's a little difficult to forecast revenues or, model in the future profits and revenues based on this. So the question remains that, how do we model our future revenues, independently from capacity utilization? And of course, the question also remains that, the 18,000 tons capacity addition that we have spoken about earlier, what is the timeline for that? Is it the same is it getting done by June this year or is it getting delayed a bit further? And yes, where should we expect utilization to come in at for the full year?
Super. Thank you so much, Mr. Sarkar, for framing the question so nicely. And it would be pleasure to answer you this. Okay, so let me put it differently. The capacity utilization per metric ton, what should be my margin? If I just ignore for a moment to clarify your question only, instead of tonnages, if I say how much profit I should make per ton, and in my calculation, as I mentioned earlier, it's 140 versus 100 rupees purchase and 140 rupees kind of revenue generation, right? So we are making a EBITDA of 40 rupees. And if you look at the kind of profitability now, it's 16 crore kind of EBITDA is there. Okay, 16 crore gross profit is there. So, it's about nearly 4,000 metric ton equal to that. And if I reach to a profitability of 40 crore, I will have impliedly, it is a 10,000 metric ton of the tonnages have been handled, which may be lesser because of the high margin and high value what we prefer to do. It may be higher tonnage of 20,000 metric ton if I restrict my margin to 20 rupees a kg. Okay. Then my capacity utilization will be 80% with 20,000 metric ton. Now, but if I can earn the same profit of 40 crore out of 10,000 metric ton and capacity utilization remains 40%, then I believe, and in my opinion, the policy is good enough at our end. I do understand from your point of concern that how do you project the future profitability on what basis. So I'll suggest a yardstick of rupees 30 to 40 per kg you should apply to the profitability for while working out on the tonnages.
Right. Thank you. So should we assume that for FY25, now since you are again modeling it on tonnage only, so
So when I'm
FY25.
saying, I'm sorry to interrupt you, when I'm saying 12,000 metric ton of capacity utilization by March 25, there may be possibility that entire 12,000 metric ton material also comes in of high value. Okay, in that case, my margin will be much higher than what I'm saying, giving the number. But assuming 40 rupees a kg, it should be profit should be 48 crore, 50 crore kind of,
Right. Right.
right? So let's be hopeful of achieving all the six.
Sure, sir. And about the timeline of the 18,000?
Yes, correct. So 18,000 capacity has already been set up, Mr. Sarkar, and utilization, as I mentioned, 50% should be through by March 25, and close to the 100% by March 26.
Oh, thank you, sir. I'll come back.
Okay. Pleasure.
Thank you. The next question is from the line of Advait Joshi from Rising Star Investments. Please go ahead.
Sir, regarding our collection centers, are we planning to do our collection centers pan-India so that we can get some retail inputs like mobile phones, laptops, and which are higher margin?
No, Mr. Joshi, collection center does not help you in collecting high quantity. It is direct courier and direct transport from the consumer or from the customer is better than storing it in the different locations where the chance of pilferage or leakage is much higher.
But we are planning to increase collection centers because right now we are having very few collection centers across Mumbai or pan-India.
No, we don't have collection, even a single collection center in Mumbai or anywhere. We have collection boxes set up in schools and colleges.
Boxes, right. So we are planning to do that to increase the number of boxes in
Yes.
institutions or the places where we can get the laptops and all.
Absolutely. From 5th June itself, you will see that kind of movement is happening.
All over Mumbai and pan-India.
No, not pan-India, only all over Mumbai.
Mumbai
Itself has a population of 3 crore, which is significant.
Right. It is to our location, that's why.
About initially we are planning for 100 immediately, and maybe plan to reach to 500, but only in the city of Mumbai and nearby municipal corporation.
Okay, thank you very much.
So nice. Thank you.
Thank you. The next question is from the line of Chirag Jain from Yogya Capital. Please go ahead.
Thanks for the opportunity, sir. Sir, my question was majorly on the broad industry perspective. Can you throw some light on the competitive intensity with similar focus of yours and new players coming in, or what's the current players' competitive industry intensity? That's what my question on.
Chirag, it's a very beautiful question. First of all, I admire that. And let me confess and say that unfortunately, I don't have the statistics of the other players. The reason being, we are the only listed company whose figures are publicly available, and I don't have an access to their numbers. So it's difficult for me who are in comparison or in competition. So but what we prefer to follow the policy which I have a number of times over this call we have mentioned, and it's our policy is not the capacity but the profitability.
Not by numbers, but by general competitive industry in terms of qualitative number. Qualitatively.
Qualitatively, in what sense? You mean to say that what kind of percentage margin they are making, or what tonnages they are doing, what?
Yeah, so that's what my question was on.
So, there are a number of companies which we know through Google and all other this public domain that there are companies who are doing a business of 100 crore and 200 crore, and their profitability is close to about 10 crore to 15 crore to 20 crore. So these are the numbers available what in public domain is. Now, I don't know how do I say in qualitative terms to this.
So to add to that, in terms of are we competing with them in the same market? How do they source? How are they different? Is there any difference in sourcing or selling? So that was my broader question.
So my point since beginning is the same. We deal with the multinational companies and the brands who are following globally the best practices of paying to the service providers for all their services right from collection to data capturing to transport, packaging, and inventorizing, and giving them all the details so that they can follow the global best practices, and we charge for all these things. And I do not know about other competitors of mine, how do they provide the service to their clients.
Thank you. The next question is from the line of Vinay Sharma from Upper Circuit Investment Services. Please go ahead. Vinay Sharma, the line for you has been unmuted. You may proceed with your question. As there's no response from the current participant, we will proceed to the next question, which will be from the line of Ashish Soni from Family Office. Please go ahead.
Sir, last few concalls you mentioned your contract with this MNC brands, and when you spoke about this capital utilization of like 12,000 ton maybe by March 25 FI, so you're saying high value. So is it contract? It depends, like it's a mixture of lot of things, or do we get only high value because you have signed a contract, if I recollect, maybe 2-3 concalls back. So what is causing the hesitance like that we won't get high value or we are picky? What's that? I'm not able to understand that.
Okay, so let me clarify this point once again. And for future also it will give a guideline to all. Okay, what I mean by high value is IT devices, communication devices, as against washing machines, fridges, oven, toaster. These are low value and volumetric material. If I take 10,000 metric ton of volumetric material and process and earn 10 to 12% kind of margin, and still my top line remains about 40 to 50,000 rupees per kg max to max, because maximum items are plastic and iron, ferrous and all, containing copper also to some extent. So I am saying 40 to 50 rupees a kg. That will give me a top line of 40 to 50 crore against 10,000 metric ton. Okay, and a profitability of about 5 crore rupees. This is what is the low value item. So my tie-up is not there with electrical and electronic devices to a great extent. It's only a nominal agreement we have with 2 companies only for a limited quantity. But otherwise my maximum contract is there with the IT and communication device companies. This is the significant difference.
Basically, indirectly you are saying maximum your contract is actually high value only. It's like some nominal based on whatever terms of the contract you have done. You have to oblige them based on the contract or maybe relationship wise. Is that maybe 90-10 sort of thing if I assume, just for assumption?
Broadly, yes.
Thanks, sir. All the best.
Thank you, Mr.
Thank you. The next question is from the line of Sachin Shah from Sun Advisory. Please go ahead.
Hello, good afternoon, Mr. Soni.
Good afternoon, Mr. Sachin.
One question is, I think in this quarter, roughly the volumes would be about 1,000 tons. And if you can split that volume between your processing at your own factory and then at the third party, which is the international, because in the last call, you had also explained that the volume is split between your own factory processing and internationally with your tie-up processors. So if you can split the volumes for Q4. Thank you.
Super. So let me give you the number. I don't have ready in terms of the tonnages what we did last year with the international partners, but we made a profit of in the revenue you will see about 4 crore revenue we have received only from the business we closed with the multinational companies sitting elsewhere in the world, not in India. I'm talking about the recyclers, not the multinational company. I'm sorry. So this recyclers, whatever the business we downloaded to them of our clients, we made a net profit of, net revenue out of that is of 4 crores. And that in case of, if you apply the same principle of mine of 40,000 metric ton, is close to about 1,000 metric ton. That is what we did the business. I hope to do at least 2 times of this business in the running year, in the current year. If I have answered you completely about this.
No, thanks, Mr. Soni. What I was trying to find out in Q4, the 1,000 metric tons which is shown as the volume, that I think also includes the third-party processing. So I wanted to understand what is the whole processing, right?
Proportionately, it may be about 200 to 250 metric ton in that quarter against 1,000 metric ton in the whole year.
Okay, got it. So effectively, it's 750 of own capacity being utilized out of 1,000.
Correct.
Okay, thank you very much.
Pleasure.
Thank you. Ladies and gentlemen, you may press star and one if you wish to ask a question. The next question is from the line of Yatin Kapoor, an individual investor. Please go ahead.
Yeah, thank you, sir. So my
Yes, sorry to interrupt, Yatin, but you are not audible at the moment.
Can you hear me now?
This is
go ahead.
better. Please go ahead.
Okay. So my question is regarding specifically in Q4 each year, we can see that we see a negative income, other income specifically, whether it's 24, 23 or 22, and similar trend can be seen in cost of material. So any reason for that our other income is negative each year, Q4, and cost of material Q4 each year?
Let me just have a look at the number. I don't think there is a negative in this side, this quarter also. Last year it was March 24, yes, you are right, other income is negative by 39 lakhs as against 213 lakhs in the previous, 18 lakhs. Yeah, you are right.
Yeah.
So that may be because of the fair value. It's only impact of the fair value during this March quarter probably, but otherwise there is a substantial gain from the investment to the tune of 1.82 crore in this year and 2.57 crore in the last year.
Thank you, sir. And anything specific for the cost of material, because we haven't increased any further costs for each year. So this year it's roughly 2.1 crore. Last year it was 1.7. Our in the previous quarters were 8 crores.
So 2.18 crore is the cost of material consumed for this quarter, yes. And then you said for the March quarter, December quarter you are comparing with, or March 23, 1.7 crore?
Yeah. So I'm saying that every Q4 we can see a higher cost comparing to the previous quarters. So this quarter you can see 2.1, whereas last quarter was just 90 lakhs. So why is such a big spike in cost of material?
I don't think, Mr. Yatin, it has a direct relation with any quarter-wise any relationship, but it may be coincidence that in the fourth quarter only this kind of things have been noticed by you, but there is no quarter-wise as such. Might be a quality type of material what we have received, and maybe of a much lower the price or much higher the price in different quarters. So depending on that, maybe.
Okay. Thank you.
Yeah. And as you better know, I must clarify further, as you better know about that in scrap, you never know the quality and the quantity when it comes to have the kind of recoverable material out of that. It is only out of the experience you judge the value and you get the material. So there may be some variation quarter to quarter. Yes.
Okay. Thank you, sir.
Pleasure.
Thank you. The next question is from the line of Shweta from Equilon. Please go ahead.
Hello. Yes, am I audible?
Yeah, please go ahead.
Yeah. So I have a question regarding the, collection of the high value equipment that we are looking at, like laptops and all. Are we having some marketing or advertising plan for the local people besides the boxes that you said? Is there some buzz that we are going to create? Is that in planning? Because how do people engage and know about it besides the Instagram page that you have?
Okay, so Shweta, we did a lot of such exercise in the city of Mumbai and neighboring municipal corporation area. The response of the social media was completely zero. Hardly 1 or 2 inquiries through the social media we received. Therefore, we decided to set up the collection boxes in the schools and colleges, where generally speaking, the family members do visit, the children who goes to schools and colleges do come to there regularly. And once they will see these boxes, then there is a direct awareness and direct action will be there. And there you can go and deposit because schools and colleges generally are in the vicinity of your residences, you know. So that is what we felt that is a better way to reach the general public and to help them out in disposing their e-waste in an environment friendly manner. But you will see some kind of movement with effect from 5th June itself when we are launching it at a larger scale.
So I have a suggestion. Recently I visited SBI branch and there I saw like a box. So if we have tie-ups with like, like banks or something like where local people can be reaching more frequently because banks are some places you go pretty often. Things like that. Like we can think of innovative things like that is one of my suggestions.
Superb. Thank you so much, Shweta. We will keep it in mind, but our experience speaks that if the boxes are there in the educational institution or spiritual places, there are always chances because the family members do visit regularly and there are no chances of any leakage or taking away anything out of the box. Otherwise you will never find the box also around. So these are the chances we don't want to take and therefore we have chosen schools and colleges.
Great, sir. Thank you so much.
Pleasure, Shweta. Thank you so much.
Thank you. The next question is from the line of Manthan Javeri, an individual investor. Please go ahead.
Yes, am I audible?
Yes, please.
Okay, so my question is regarding why the depreciation cost is negative in this quarter?
Which cost?
Depreciation.
Depreciation. Okay.
Yes.
So that is because of? Okay, no. Let me just clarify this. So there is a lease asset, am I right? On the lease asset, the provision what we provide as per the Indian accounting standards, the rate what we used to apply for of 13% has been reduced to 8% because the lease liability was increasing substantially, which was not in proportion to the value appreciation of the property. So therefore, the depreciation is negative this time.
Okay.
Year-end adjustment.
Yeah. And coming back to the question of this margins, so our margins is quite like volatile on quarter. We were doing like 60% margin from Q1 and then we hit EBITDA margin of 70% in Q3 and suddenly the margins have dipped to 45%. So first of all, any reason behind this particular fall and what could be the sustainable margin band that we can work with going forward?
Okay,
so EBITDA margin.
Okay, so I take your second part first. We always focus on at least 40% kind of margin. That is first thing.
Okay.
Second, in case of scrap collection, when it happens or the generation, it happens at the end of the corporate or the producer. You never know the permutation combination of a scrap material. It's not a homogeneous material. I'm not a laptop manufacturer. I'm a laptop collector at the end of the life. I'm not a CPU producer, but CPU collector at the end of the life. So whatever gets generated at the end of the big corporates or producers, that is what we collect. So that permutation combination keeps changing. If you will further analyze, on month-to-month basis, you will find a variation. On week-to-week basis also, you will find variation because there is no standardization of the scrap material. So I believe you should compare on year-to-year basis rather than on quarter-to-quarter basis. So that will be a good yardstick probably you can get because then you are getting all seasons are along with that, all the quarters and all the months together.
Okay, so basically what we're trying to say is that we can work with the margins of like 40-45% in a minimum margin of 40-45%, and then it can vary depending upon
focus. 40% is our minimum focus all the time.
Okay. And this last question, coming to this capacity one. So our capacity operational is 25,000 as on date. Is that correct? Operational capacity.
Yeah, operational capacity setup is of 25,200 metric ton. Yeah.
25,200 metric ton.
Installed capacity.
And of that we are estimating the utilization of 12,000 metric ton for the full year of FY25. Is that correct?
Yes, you are absolutely right.
If we exclude the EPR credit revenues, is it safe to assume the blended realization of that we outsource and our in-house of like 100 to 110 per kg?
Sorry, the last part I didn't understand.
So I'm asking about this 12,000 metric ton, the blended realization, if I exclude the EPR credit part, is it safe to assume that it will be at least 100 per kg or 110 per kg?
Sorry, I won't be able to answer you. Then it will be talking about what is the rate of EPR, No,
that's what I'm asking. That's what I'm thinking. I'm asking excluding EPR credits. That's why I am not asking for EPR credits. I'm just talking the pure recycling tonnage business.
No, I understand. So EPR credit is generally in the market is around 10 rupees to 15 rupees kind of kg per, EPR fees. Is the what market practices are there. Eco doesn't work on such kind of low fees.
Yeah. So blended realization, like we can work with the 100 rupees per kg. That's what my question is like for 12,000 metric tons. It's safe to assume that we will do at least 100 per kg. Okay, I'm not counting EPR credits.
Yes, that is there otherwise also.
Okay.
In fact, we have higher than that.
Okay. Fair enough.
Thank you.
Yeah, that's it, my friend. Thanks.
Okay.
Thank you. The next question is from the line of Uday Kota, an individual investor. Please go ahead.
Hello. Am I audible?
Yes.
Nowadays in Bangalore, I'm seeing a lot of e-waste collection boxes in all the software companies. Since there are many software companies in Bangalore, are you planning to expand to Bangalore, at least for collection purposes?
We don't mind setting up Uday over there also. But then who will be taking care of the collection on regular basis? Who will be investing in these boxes? How the boxes will be preserved and in terms of that protected. So these are all question marks which are really, needs to be answered before I can say yes to you.
Thank you. Ladies and gentlemen, we will take that as our last question for today. I would now like to hand the conference over to Ms. Chandni Chande for closing comments. Over to you, ma'am.
Joining the conference call of Eco Recycling Ltd. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you for joining the conference.
Thank you so much, all of you.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.